The dramatic economic effect of the lockdown was laid bare tonight, with figures showing that the UK economy shrank by more than a fifth in April. That's the largest monthly contraction ever recorded in our first full month in lockdown. The slump of 20.4% in economic growth is 3 times larger than that seen during the whole of the financial crisis 12 years ago. The Office for National Statistics says it's affected almost all areas of economic activity, with housebuilding and car manufacturing particularly badly hit. The UK is now on course for a recession, which is 2 consecutive quarters of negative growth. But analysts say that April was likely to have been the worst month. Our economics editor Michael Gove has this report.
A massive hit to the economy is no surprise when streets are silent, shops are closed, factories idle and tens of billions of sales don't happen because they cannot. But such a slump on this scale in 1 month isn't just a record, it was unimaginable and way beyond any normal scale. Marlow Zoo, one example of a leisure attraction whose shutdown during the pandemic is seen in these numbers.
April had Easter in it this year, and so we were expecting about 70,000 guests to come here to Marwell to enjoy the zoo, and in the end we got nobody at all. So whilst we were expecting about £1.8 million in terms of visitor income for that month, we didn't receive anything at all. So disastrous really, April, for us.
In April, the first full month of lockdown, the economy fell by just over 20%, losing a fifth of its total value. It means since the pandemic and the lockdown began in March, the UK economy has lost a quarter of its value. That's the cliff in this chart, making the financial crisis in 2008 resemble a small blip. The question, where do things go from here?
For a dynamic, creative economy, we depend so much on human contact. We have been very badly hit by this, but we're also amazingly resilient and creative. We will bounce back.
There was a report that came out a couple of days ago from the OECD, that group of industrialised nations, and it suggested that the drop in GDP for this year for the UK would actually be worse than for every other industrialised nation. So we're in a very, very difficult situation as a country.
In Oxfordshire, an airfield with tens of millions worth of vehicles waiting for the showrooms to sell again, and in turn meaning the car factories will be far from full tilt.
So this is what those grim numbers look like in reality. Up and down the country, storage areas, airfields, ports full of unsold cars. In April, a 99.7% fall in car sales. The challenge now, as lockdown just starts to ease, is will it actually return to normal? Will these cars actually sell, or is the economy fundamentally damaged?
In Germany, they funded thousands of euros for new purchases of green cars and slashed VAT as part of a massive second rescue package. Here, more support on its way, signalled by the Bank of England.
We have to be ready to take action, not just the Bank of England, but more broadly on what we can do to offset those longer-term and damaging effects.
For the moment, the government is focusing on a gradual reopening, for example, of the housing market.
We're just starting to recover. I do believe it will take at least to the end of the year to come close, whether we'll even get there. But, I feel positive that there's enough people who want to move. And if there's enough people that want to move, then people will sell and people will buy.
And there's much lost ground to make up in gyms too, with the added challenge of whether people will use gyms in a new normal.
The fitness sector has proved before that it's particularly resilient in a recession, and I think we will benefit greatly from the tailwind provided by the pandemic, actually.
We've never seen a weaker month, the economy far from fighting fit. The question, just how long the process of rehabilitation will take. Faisal Islam, BBC News.
Well, the economic uncertainty has led to calls for trade talks with the EU following Brexit to be extended beyond the end of this year. But the government has ruled that out, with Cabinet Minister Michael Gove saying he'd formally confirmed to the EU that there will be no delay. But checks on goods coming here from the EU will be phased in next year to give businesses time to adjust. Our political correspondent Alex Forsyth reports.
It's not been business like this for months. Many firms disrupted because of the virus. And at the end of this year, another big change could be brewing. Our current trade terms with the EU end, and there'll be no extension, whether there's a new deal or not.
we would not be extending. That's it. We are leaving the transition period on December the 31st. That provides clarity and certainty to business, and our announcement today allows business to plan in an appropriate and flexible way.
The UK left the EU on January the 31st, allowing a year where not much changed to work out future relations. Those talks haven't made huge progress, so on Monday the Prime Minister will meet EU figures to try and get things moving, because December the 31st is the deadline for a new trade deal to be agreed, and that won't be extended. Although some still think it should be. And why?
To take away the risk of a no-deal outcome, and also to make sure that all of us remain focused on supporting business through the post-COVID recovery and not making the challenges that the economy and our businesses face any worse than it already is.
For some businesses, though, some relief today. This fashion firm imports from and exports to the EU. And today the government said from January it would relax new rules on some goods coming in. 6 months grace for customs paperwork and payments, which was welcomed here.
Setting up a whole new border control system in 7 and 8 months wouldn't be realistic, and I think the UK consumer will benefit from that.
The government insists it's not backtracking on previous plans, arguing that a phased approach to new customs checks is pragmatic in the current economic climate. But the EU is not reciprocating, saying it will be ready for controls on imports come January. Brexit may not have dominated here of late, but that doesn't mean the political pressures eased.
The government was re-elected with a significant majority, with a strong mandate to get on with Brexit. If the government's going to fulfil the commitments on which it's elected, we need to have those customs processes and our borders fully operational as soon as we can.
For businesses, certainty as ever is key, even more so given the turmoil of coronavirus. While a slower approach to new border checks might be welcomed by some, it's whether a trade deal can be done that remains crucial to many.
And Alex is in Westminster now. Alex, coronavirus and Brexit, these are two huge issues in the government's in tray, aren't they?
Yes, Rita, I think that's right. And on Brexit, the fact the government is relaxing the timetable for those new custom checks is something of an acknowledgement of the disruption that businesses are currently facing. But the big question is, of course, whether a trade deal can be agreed in the timetable the government has now committed to. And both the EU and the UK say it's possible. They've agreed to accelerate talks in coming weeks, but there are still big gaps between the two sides, so it will require significant compromise. And of course, the backdrop to all of that is the economic picture that was painted so starkly by those figures released today. And it may not be a surprise, of course, that the economy took such a hit during the lockdown period. But what is key now is whether the recovery is fairly, relatively quick, or whether there is lasting deep damage. And remember that this was a government that was elected on a platform to get Brexit resolved, but also to tackle some of the regional, the societal, the economic inequalities in this country. And I think what is clear now on both fronts is simply the scale of the challenge the government is now facing.
OK, Alex, many thanks. Alex Forsyth in Westminster.